Hey guys, and what is up? I am Zach Mercy here with a little video for you today. Had to set the lights to green because today we're talking about something that can make you a lot of money. Now, I'm just going to say it very simply put, which is kind of a pun because today I'm talking about call and put options in the stock market. Now, I'm only going to go over the very basics of what a call and put option are. So I'm going to go ahead and also throw some things up on the screen for you that are a little bit more of an explanation, and I'll also put links down below to even more advanced videos that'll explain strikes and furthering your knowledge of put and call options in the stock market. So I will also include some footage from Webull. Now, you can also use the Robinhood app, which is a great app for trading stock. I currently don't use it. I use Webull because Webull has better indicators and shows a lot more charts. You can also comment on it. Pretty cool. I'll also include a link down below to get 2 free stocks on Webull. But yeah, go ahead and check that out if you want. Go ahead and drop a like and subscribe. I know I'm a very small channel with 0 subscribers currently, so that would really help me out. But yeah, let's go ahead and get into it. So the basics of a call and put option are, it's a way to leverage your money. Now, leveraging your money means you can use $1 but spend $2. So for every $1 you put into a call or put option, you receive $100 leveraged. Now, that can be a bit complicated to understand, but the stock market is a magical place. So, for basic sake, if you buy a $45 option, and let's say the stock goes up 2%, well, technically speaking, every single one of your stocks, 45 times 100, 4,500 stocks, just went up, the 2%. So you end up getting a large increase on your funds. Now, what I just said actually made absolutely no sense, and that's why you have to be careful about the YouTube videos you watch. So some people might believe this guy is well spoken and talking, so boom, he has knowledge. Now, that's exactly why I'm only going over the basics. I don't want to fool you, I don't want to trick you, and I don't want you to get the wrong idea because you can lose a lot of money. So the way an option actually works is when you buy an option, let's say for $30, and you believe you buy a call, more specifically, you buy a call because you believe the stock will go up. So you put $100 into, or $30 into, sorry, I hit the mic, you put a $30 into a call option and it meets your requirement. It meets where you think the stock will go. So let's say the stock is at $1.80 and you think it'll go to $2. If it goes to $2, your stock option will be booming. It'll go up quite a bit in value because what happens is when you buy a call, that money you originally bought it for means, boom, you can sell it for that price. So now to break it down, really break down a call option specifically, you have to look at a put option as well. So a put option means you believe the stock is going to go down, and it meets the same criteria. If the amount of the stock goes down to where you believe it'll go, then boom, you make your money. Now, put options are very interesting because they have a limited range of how much you can make, because a stock can only go from, let's say it's at $2 to $0. It can't go into the negative. Now, a call option has limitless opportunity to make money because a stock could just continuously rise. Will it? Probably not. So you have to decide a good place to get out or sell that stock option unless you want to exercise it, which exercising is a bit more advanced, so that will not be explained in this video. But the great thing about it is that when you really break it down, a put option is when a stock will go down. A call option is when you believe a stock will go up. And if you do really good research, you'll know exactly the amount, or right around the amount that you believe it'll go up. And you really want to look at that percent-wise, because that's what most people look as indicators. So if you believe it'll go up 10%, then you want to look at an option that'll probably go up 10%. So for instance, if it's at $2, you think it'll go up 10%, buy an option that'll be at $2.20. So that's what you want to kind of look at. Now, to explain a little bit further of a put option, which will put into retrospect a call option. So a put option means, so let's say I buy a put option for $100. Now let's say the stock goes down past that put option. Let's say it goes to $90. I can still sell the 100 stocks that are in that option for $100. That means I can make $10 of profit on every on every single stock, and there's 100 stocks. So that'd be $1,000 of profit. So now you can see where I'm going and why this would make you so much money. So that's how a put option works. Now, a call option is similar, but like I said, you have unlimited opportunity to go up. So yeah, it's pretty amazing. That means, so if you exercise it, I guess I will go ahead and cover this because it is fairly simple. If you exercise your call option, it falls more with the call option. If you exercise your call option, then that means you would be able to buy 100 stocks. So for instance, if you buy a call option at $90 and it goes to $100, you can buy the stock for $90 even though it's at $100 and make $10 of profit on each and every single one of those stocks. Now you might be wondering, how are you able to leverage so much money? Well, let me put it this way. If your option doesn't hit, or it's the day it expires, because options do have an expiration date, and it's the day it expires, that it means you are going to basically lose a vast amount of money. Now, call and put options both can go all the way to zero. So you don't want that. So you want to find a really, really good entry and exit point. So that's what you really want to look for. You really want to know how much you think it's going to go up or go down and do your own research. But yeah, right here, probably need to add a little disclaimer. I am not a financial advisor, so do your own research in these stocks. You don't got to put a little disclaimer there. But that really does cover most of the basics of a call and put option. The simplest way I can put it in a couple sentences is if you believe the company is going to go up, buy a call option. If you believe the company is going to go down, buy a put option. The reason for buying a call or put option is to leverage your money 1 to 100, and that way you can make more money even if it only goes up a small percent. So for instance, a little bonus right here is if you buy into a larger company, a stock is worth more and it goes up 2%, your option is going to be very profitable. But if you buy a small company and the stock is only worth $10 and it goes up 2%, the option's not going to go up as vast as it would if the stock was 180. So that's just a brief explanation there. But put option means you think it's going to go down. Call option means you think it's going to go up. So get out there, start looking at options. And one last thing is when you look at the option, you have to decide whether or not you can take that risk. Now, the reason options are risky is, like I said, it can go to zero. But the reason they're so beneficial is you can make so much more money with leverage. And you can also do research on margin, although margin is even riskier. I'm not going to go into margin. But remember, you are selling the option, for instance with a call, to be able to buy the stock at a lower price, even though it's at a higher price. And when you are buying the option of a put, you are buying it at a higher price, but so for instance, again, $100, it goes down to $90, you can still sell it at a higher price of the 100. So you believe it'll go down to 90 and you'll make that leap into 100. So for instance, one last time, reiterating it one last time as simply as I can, put options go down, call options go up, bada bing, bada boom, your money's leveraged, you're good to go. But there is the risk of it going to zero. So just make sure, do some of your own research. Like I said, I'll put links down below onto more advanced videos. But yeah, that's pretty cool. And also make sure you research strikes and selling and shorting and just learn more and more and more about the stock market, because learning about the stock market and investing in yourself is the best thing you can do, especially during these troubling economic times. The stock market is kind of fooling everybody, making the economy look like it's really, really great. But with the high unemployment and where we're going, I don't know. I really don't. You know, the riots and all that. So maybe also expand your portfolio, invest in Bitcoin, invest in gold, make sure that you're diversified. Warren Buffett, really big on diversification. So make sure you're looking at that. I hope everyone has a great day. Check out the links down below for Webull and things like that. Do your own research. And guys, that is all I got for you today. I hope you learned something. If I was a little confusing, go ahead and give me some pointers. I mean, I'm kind of new to this whole game. I'd really appreciate it. Just drop a comment down below. I mean, even leave a dislike if you must, if it was a bad video. Any interaction helps out, and the analytics help me to make my videos better for you. So yeah, guys, that's all I got. And until next time, this has been Zach Mercy with some financial advice. Thanks for watching.